Good afternoon, everybody. It is June 2nd. It is the closing bell here at MarketStream.live in TGIF. My name is Joseph Cusick from the Cusick Group, securities offered by MoneyBlock. We are finishing up the start of the new trading month, June, and it has been amazing. The last two sessions, we continue to hit all-time highs. The markets just keep beating that bullish drum. Taking a look at the Dow Jones, finished up 62 points. That's good for almost 0.3% to the upside to 21,206. The S&P 500, moving, up 9 points. That's good again for about 0.37%. That's 2,439 on the cash index. The NASDAQ 100 was up 64 points at 5881. And the Russell 2000, that's that domestically centric and sensitive index for small caps, for companies that are small businesses, are represented in this index, up $9.32, excuse me, at 1405. And it's been an impressive two-session run. Now, the catalyst today, you could say it was employment. 4.3% unemployment came in, so we're looking at full employment. Now, again, I'm not going to do a Linda Blair here and play exorcist and basically have your head spin around, because you're saying, yeah, but 4.3%, let's ignore the 95 million Americans that basically aren't accounted for. Let's also not talk about the fact that we haven't seen wage inflation. And, oh, guess what? That price inflation as a consumer that you've been waiting for, which you would assume would come along with the type of employment picture that we have out there, well, it's non-existent. As a matter of fact, price inflation was higher 20 years ago than it is today. So the bottom line is that you can just sit here, you're scratching your heads, and you're like, well, as a trader, I can't fight the tape anymore. All right, I understand that. That's why you stay small, you keep your powder dry, and you basically have to stay extremely disciplined and focused. But when you look at this, if you actually look at this market that has been moving basically to the upside unabated for the last basically 5 years, the one thing that you want to understand is that we are seeing one thing, that regardless, if you see global PMIs continuing to move to the upside, regardless of here in the States, you see 4.3% unemployment, there's one thing you're not seeing. And you're not seeing wage inflation. And I don't care what anybody says, unless you start seeing people make more money. Believe me, I know what I'm talking about. If you do not start seeing people making more money, in other words, meaningful wage inflation, put it in terms like this so that you all will get this. We're not going to talk economics or PCEs or unemployment numbers or PMIs. The consumer right now is using vehicles like Amazon and Walmart literally to have groceries dropped off at their house. Or I want a pint of ice cream, and a worker on his way home from Walmart will drop it off at my house for $1.98 or $3. I don't even have to get my butt off the couch to go in there. The other thing is instead of buying the Deans, they're buying the store brand. In other words, you're seeing that the consumer, and this is what's been keeping a lid on consumer pricing and inflation, is the fact that we're seeing everyone's going generic. We're moving away from brand name. So not only has the Amazons and the Walmarts of the world basically kept price inflation kept a lid on it for all intent purposes, and also left pricing extremely competitive for products. You're also seeing that people are moving away from the more expensive brands to the cheaper brands. Why? Well, even though they're employed, they're not making as much. So even though things are growing and we've had a steady growth rate and so forth and so on, people aren't making more money. So at the end of the day, unless you start to see meaningful reforms, and I live in a state right now that got downgraded to a level that's just above junk. Illinois is about to go broke. And the bottom line is everyone's running around screaming about this, that, and another thing. And I'm looking at a possible tax increase in my own state that has no wage inflation, is actually now proposing to tax Not only have they started to tax sugar, which is real, now they're putting in other taxes on earnings for specific groups. Like, for example, your financial advisor. If you're in Illinois, they're going to get charged 20% on their taxes for any earnings they have. This is insane. And so the bottom line is that I look at this and I go, all right, I'm not going to fight the tape. I'm going to watch this. I'm going to see it meaningfully. I'm going to use the products that we talk about here, doing the strategies like covered calls, diversifying your portfolio. You've seen that there's been a flight out of the U.S. into emerging markets and tier 1, tier 2 global markets, like in Europe and in Asia. You're doing those types of things, or you're cycling out of big cap tech that has been moving and taking this market on its back and moving into areas that have been beat down, like maybe materials, maybe some commodities and so forth, because while there isn't inflation now, maybe there could be. The point being is that everyone's been prudent and pretty logical about this, but to get that next leg to the upside so that people don't get too over exuberant, also so they don't feel like they're missing some sort of train that's left the station, watch things like wage growth. Watch things when people start looking at it and say, you know what, there are 95 million Americans that are basically unaccounted for in that 4.3% unemployment rate. Is this real? Is this sustainable if we don't get things like tax reform, if we don't get healthcare reform? If on the state level, look at the state you live in. Like when I look at Illinois, unless we haven't had a budget in 2.5, almost 3 years. This is ridiculous. I mean, this isn't normal. So keep your heads about you. If you're in the markets, look at your portfolio. Call your advisor, sit down with them, talk to them about what they think. What are they looking out on the horizon? Are you actually diversified? Is there potential to basically trim out of some of your portfolio so that you can keep what you have when times do get more volatile? And they will get more volatile. When that is, I don't know. Speaking of volatility, the VIX actually went out today. I'm just going to bring it up right now. This is my gauge for those of you of where I see that the market is anticipating big violent moves. It went out at 9.8. It's at its lows, right? We're in single digits. Complacency has hit this market. And that doesn't mean anything more than whatever the current trend is right now, there's not a heightened expectation of potential violent moves. So with that being said, I don't want everyone going into the weekend thinking, oh my God, something bad's going to happen. No, what I'm saying is that be very prudent. Press your advisors to make sure that they're sitting down. This is the perfect time to look at your portfolio that's probably been performing very well. They will say, take the long road. Take the buy and hold, the passive approach to this. It's been great for 5 years. What could possibly go wrong? And that's the question that you want them to answer. And what is the action plan if, in fact, we start to see that landscape start to arise? And where can you find out where that's going to happen? When that could potentially be transpiring? Right here at MarketStream.live. Join us. We're here every day. We're here 5 times a day, as a matter of fact, talking about all these components, and we're trying to make it as transparent and real for you, the viewer. All right, folks, that's it for the closing bell and for this wonderful trading week. It has been fun, and I will be back online next week, bright and early. We'll be back on for Sunday night setups, and as always, we will have all 5 shows starting next week on Monday, so we will see you then. Have a great weekend. Take care.